Before we dive in, a quick but important disclaimer. This video is for educational and informational purposes only. I am not a licensed financial advisor or insurance professional, and this presentation does not constitute financial, legal, or tax advice. The world of insurance is complex, and you should always consult with a qualified, licensed professional who can provide advice tailored to your individual circumstances. Think of this as your pre-game strategy session before you meet with the pros. Let me tell you a story about a guy named Mark. Mark was 38, a software engineer, married to his college sweetheart, with a 2-year-old daughter who had him wrapped around her little finger. They just bought their first house in the suburbs, the one with the big backyard they'd always dreamed of. And with that mortgage and that new baby, Mark did what every responsible parent does. He decided it was time to get life insurance. So he did what most of us do. He went online. He Googled cheap term life insurance, clicked one of the top ads, and filled out a form. A few minutes later, his phone rang. It was a friendly, energetic guy from a national call center. He was smooth, he was fast, and he had an answer for everything. He quoted Mark a $1 million 20-year term policy for a price that seemed almost too good to be true. Mark felt a huge wave of relief. He checked the box. He was protecting his family. He signed the digital paperwork, set up the automatic payments, and didn't think about it again. What Mark didn't know was that the faceless voice on the phone was a glorified order taker, not an advisor. He didn't know that the policy he just bought had a sneaky graded death benefit clause for the first 2 years, buried deep in the fine print. He didn't know that the insurance company he was now with had one of the worst ratings in the industry for actually paying out claims without a fight. And he certainly didn't know that because of a minor, well-managed health condition he'd disclosed, he could have qualified for a policy with a much better company, for almost the same price, if he just had someone who knew where to look. 2.5 years later, the unthinkable happened. A sudden aggressive illness. 6 months after the diagnosis, Mark was gone. His wife, in the middle of her grief, found the policy documents and made the call, thinking that at least in the middle of this nightmare, the finances would be okay. They weren't. The insurance company delayed, they demanded mountains of paperwork, they nitpicked his original application, and they made her life a living hell for nearly a year before finally paying out. The protection Mark thought he'd bought and paid for wasn't the ironclad shield he imagined. It was a flimsy umbrella in a hurricane. Mark's story isn't some rare one-in-a-million tragedy. It's an American epidemic of good intentions gone wrong. It's what happens every single day when good people are forced to navigate one of the most important financial decisions of their lives completely on their own. In a digital Wild West filled with misleading ads, high-pressure sales tactics, and so-called advisors, who are more loyal to their commission checks than to your family's future. Think about it. We spend more time researching what TV to buy than we do researching the person we're entrusting with our family's entire financial future. And the stakes couldn't be higher. A recent study found that nearly half of all American families would face financial hardship within just 6 months if a primary wage earner died. 42% said that hardship would be immediate. This isn't a nice to have. This is the financial foundation that keeps your family in their home, keeps the lights on, and keeps food on the table if you're not there to provide for them. This video is going to change that. Right now, this is your definitive guide to finding a person, a real human expert, you can actually trust to help you get this right. By the end of this presentation, you will have a rock-solid step-by-step playbook to find a world-class life insurance broker. I'm not just going to give you theory, I'm going to give you the exact questions to ask that will instantly reveal whether you're talking to a pro or a pretender. You'll learn the critical difference between the 3 types of insurance salespeople, and which one you should almost always be working with. And you'll discover the #1 red flag that tells you to hang up the phone, walk out of the office, and never look back. My promise to you is this. You will leave this video feeling confident, empowered, and fully equipped to build that ironclad shield your family deserves. So where do we start? We start with the single most important concept that 99% of insurance buyers never learn. The difference between a captive agent and an independent broker. Understanding this one thing can save you thousands of dollars and an immeasurable amount of heartache. First, let's talk about the captive agent. A captive agent works for one and only one insurance company. Think of your local State Farm agent, your Northwestern Mutual advisor, or your New York Life representative. These are employees or exclusive contractors of a single mothership. Now there are some fantastic, ethical, and knowledgeable people who work as captive agents. The upside is that they often have incredibly deep knowledge of their company's specific products. They know every rider, every rule, every nuance of the policies they sell because that's their entire universe. But here's the massive glaring downside. Their toolbox only has one brand of hammer. If you walk into their office, they are contractually obligated to try and solve your problem with a product from their company. It doesn't matter if a competitor across the street has a better policy for you. It doesn't matter if another company has a policy that's 30% cheaper. They can't sell it to you. Their loyalty by design is to their employer first. Imagine going to a car dealership that only sells Fords. You tell the salesperson you need a reliable, fuel-efficient sedan for your commute. They're going to show you a Ford Fusion and tell you with total conviction that it's the absolute best car for you. Why? Because it's the only sedan they have to sell. They're not going to tell you that the Toyota Camry or the Honda Accord down the street might be a better fit or a better value. They can't. That's a captive agent. Now let's talk about the alternative. The independent broker. An independent broker is like a financial matchmaker. They don't work for an insurance company. They work for you, the client. They have appointments and contracts with dozens of different insurance companies, sometimes over 50. Their job is to take your specific situation, your age, your health, your financial goals, your budget, and shop it across the entire market to find the best possible fit. This is the car consultant who doesn't work for a single dealership. You tell them you need that reliable sedan, and they can show you the Ford, the Toyota, the Honda, the Hyundai, and the Subaru. They can pull up the specs side by side, compare the crash test ratings, and look at the long-term cost of ownership. They have no incentive to push one brand over another, other than finding the absolute best solution for you. This isn't just a small difference. It can be life-changing. Let's take a real-world example. Say you're a perfectly healthy person, but you enjoy scuba diving as a hobby. If you go to a captive agent at Company A, they might look at their underwriting manual and see that scuba diving automatically puts you in a more expensive risk class, adding $50 a month to your premium. That agent has no other choice but to offer you that higher price policy. But a good independent broker knows the market. They know that Company X, Company Y, and Company Z don't really care about recreational scuba diving, and will give you their best possible Preferred Plus rating. The broker can submit your application to all three, let them compete for your business, and come back to you with the absolute lowest price. That's a savings of $600 a year, or $18,000 over the life of a 30-year term policy. All because you chose the right guide. The same goes for health conditions. One company might be terrible for people with well-controlled diabetes, while another one specializes in it. One might penalize you for a family history of cancer, while another doesn't. A captive agent can only offer you what's in their limited playbook. An independent broker can search the entire library. So the choice is obvious, right? Always go with an independent broker. End of video. Not so fast. And this is where most people get it wrong. Believing that the title independent automatically makes someone trustworthy is a dangerous mistake. Because here's the secret. Some of the worst, most commission-hungry salespeople in the industry are independent. They have a bigger catalog of products to push, but they're still just pushing a product, often the one that pays them the highest commission, not the one that's actually best for you. The real challenge isn't just finding an independent broker. It's about finding a great one. It's about separating the true fiduciaries, the advisors who put your interests first, from the salespeople in disguise. So how do you do that? How do you vet them? How do you interview them to expose their true motives? That's the key. And that's exactly what we're going to break down next. It all starts by changing your mindset. You are not buying a product. You are hiring a professional for a critical long-term role in your financial life. You are the employer and they are the candidate. And like any hiring process, it begins with a background check and a series of interviews. You need to become the world's toughest hiring manager for the most important job opening you have: protecting your family. So let's build your vetting process, your interview gauntlet from the ground up. The very first step is the easiest, but it's also the most non-negotiable. It's the background check. It's the simple question: are you legally allowed to do this job? I'm talking about licensing. Every single person who sells life insurance in the United States must be licensed in the state where they are selling the policy. Not the state they live in, the state you live in. This is not a suggestion. It's the law. This license means they've passed a state-level exam on insurance products and ethics, and they've undergone a background check. It is the absolute rock-bottom bare minimum requirement. If someone can't clear this hurdle, the conversation is over before it begins. So how do you check? Surprisingly easy. You don't just have to take their word for it. You can, and you absolutely should, verify it yourself. Every state has a Department of Insurance website. You can typically just search for your state's name Department of Insurance license lookup. You'll find a portal where you can type in the agent's name or their license number. The National Association of Insurance Commissioners, or NAIC, also has a lookup tool on their website that can help. When you look them up, you should see two things. First, an active license in your state. Second, you should see a clean record. These websites will often list any regulatory actions or complaints filed against the agent. Seeing a history of fines, suspensions, or other disciplinary actions is a 5-alarm fire. It's the equivalent of a background check on a babysitter coming back with a criminal record. You thank them for their time and you walk away. Period. This first step alone will weed out the outright frauds and the non-compliant. Okay, so they're licensed and have a clean record. They've passed the basic background check. Now the real interview begins. And your first, most critical question is designed to uncover their fundamental business model. You need to ask them, are you a captive agent or an independent broker? Their answer to this one question will tell you almost everything you need to know about the options you'll be shown. Let's break this down. A captive agent works for one and only one insurance company. Think of agents for places like State Farm, Northwestern Mutual, or New York Life. They are employees or exclusive contractors of that specific company. They are experts on their company's products. They know them inside and out. But here's the catch. They can only sell you their company's products. Going to a captive agent for life insurance is like walking onto a Ford dealership and asking the salesperson, what is the absolute best car for my family? What do you think they're going to tell you? They're going to sell you a Ford. They might sell you an Explorer or an F-150 or a Mustang, but it will always be a Ford. They are not incentivized or even allowed to tell you that a Toyota or a Honda down the street might be a better fit for your needs and your budget. Their loyalty by design is to their parent company. Now, an independent broker is different. They don't work for any single insurance company. Instead, they have appointments or contracts with many different insurance companies, sometimes dozens of them. Their job is to represent you, the client, to the insurance marketplace. Going to an independent broker is like going to a trusted auto consultant who can get you quotes on the Ford, the Toyota, the Honda, the Chevy, and the Subaru. They can line them all up, compare the features, the warranties, and most importantly, the prices, to find the one that truly is the best fit for you. Their loyalty is supposed to be to you, not to a specific brand. They have the freedom to shop the entire market to find the most competitive offer. Now you might be thinking, well, independent is obviously better, right? In most cases, yes. For the average person looking for life insurance, having access to more options is almost always going to lead to a better outcome and a better price. But it's crucial to understand the distinction. You need to know whose team they're playing for. So you ask the question directly, and don't accept a vague answer. If they say they're independent, your follow-up question is, great. Which companies are you appointed with? A true independent broker will be happy to list off major carriers like Banner, AIG, Prudential, Pacific Life, and so on. If they hesitate or name only one or two, they may not be as independent as they claim. Once you've established their licensing and their business model, independent or captive, the next layer of your interview process is focused on experience. But not just, how long have you been doing this? 10 years of experience selling the wrong products to people is worse than 1 year of dedicated, ethical advising. The right question is about relevant experience. You need to ask, what types of clients do you typically work with? Or, what is your area of specialization? The world of life insurance is vast. The needs of a 30-year-old couple with 2 kids looking for affordable term insurance are completely different from the needs of a 65-year-old business owner trying to set up a complex estate plan. The broker who is a rock star for that young family might be totally out of their element with the business owner, and vice versa. You're looking for a match. If you have a specific health condition, say diabetes or a history of heart issues, you should ask, how much experience do you have working with clients with my health profile? Which carriers have you found to be the most favorable? A great broker will immediately know which companies are more lenient with certain conditions, and which ones to avoid. A rookie or a generalist will just be guessing, and their guess could cost you thousands of dollars over the life of the policy, or even get you declined. If you're a high net worth individual looking at estate planning strategies, you want someone who speaks that language fluently. You're listening for confidence and specificity in their answer. You want to hear them say, oh yes, I work with clients like you all the time. In fact, Just last month I helped a family in a very similar situation secure a policy with Carrier X because they have a great underwriting program for that specific issue. That's the answer of a specialist. The answer you don't want to hear is a vague, "Oh, I can help anyone with anything." The jack of all trades is often the master of none. So you've checked their license, you understand their business model, and you've gauged their relevant experience. Now we get to the final filter in this initial vetting stage, the red flag detector. This is all about the feel of your first conversation. You need to trust your gut. And here are the specific warning signs that should make your gut churn. Red flag number 1, the product first pitch. If in your first 5 minutes of conversation the broker starts hyping up a specific product, especially a complex one like indexed universal life or variable universal life, before they have done a deep dive into your financial situation, your goals, your family structure, and your risk tolerance, you should end the call. This is the biggest red flag in the entire industry. It's the equivalent of a doctor prescribing a powerful medication before they've even asked you what your symptoms are. A true advisor leads with questions and diagnosis. A salesperson leads with a product and a commission statement. Red flag number 2, high-pressure sales tactics. Life insurance is one of the most important financial decisions you will ever make. It is not an impulse buy. If you ever hear phrases like, "This offer is only good for today," or "You need to sign the paperwork now to lock in this rate," you are dealing with an amateur or a shark. A professional will give you space and time to review the proposal, discuss it with your spouse, and ask follow-up questions. They want you to be 100% comfortable and confident in your decision. Pressure is a tool used to cloud judgment, not to provide clarity. Red flag number 3, a lack of transparency or an over-reliance on jargon. If you ask a simple question like, "How do you get paid?" or "What are the fees inside this policy?" and you get a confusing word salad answer filled with acronyms and technical terms designed to make your head spin, it's a deliberate tactic. A great advisor can make the complex simple. They can explain how a policy works using an analogy you'd understand. Someone who uses complexity as a weapon is not trying to educate you. They are trying to obscure the truth. Passing this 4-part gauntlet, verifying their license, understanding their independence, confirming their relevant experience, and screening for these initial red flags, will eliminate 90% of the bad actors and mismatches out there. It gets you from a massive, confusing pool of candidates down to a small handful of qualified professionals. But now with this shortlist, the real deep dive begins. Now it's time to go beyond the basics and into the very philosophy of how they advise their clients. It's time to ask the questions that uncover how they think, how they structure their recommendations, and most importantly, how their compensation truly influences the advice they give you. So let's start with the first and arguably most disarming question you can ask a potential broker. It's a question so simple, so fundamental, that a weak advisor is often completely unprepared for it. You lean in, look them in the eye, and ask, "Why did you get into the life insurance business?" What you're listening for here isn't a story about hitting sales quotas or winning company trips to Hawaii. You're listening for the heart. A mediocre agent might give you a canned response like, "Oh, it's a great industry with a lot of opportunity, and I enjoy sales." That's a red flag. It tells you their motivation is centered around them, the transaction, the commission. A great advisor, a true fiduciary in spirit, will tell you a story. Maybe it's, "My father passed away without life insurance when I was a teenager, and I saw firsthand the financial devastation it caused my family. I got into this business so no other family has to go through what mine did." Or perhaps, "I was a financial planner for years and I saw too many brilliant financial plans get completely derailed by an unexpected death. I realized that life insurance wasn't just a product, it was the bedrock that made all other financial planning possible." Do you see the difference? One answer is about a job. The other is about a mission. One is about an income. The other is about an impact. This first question isn't a deal breaker on its own, but it sets the stage. It gives you a baseline for their entire philosophy. Is this person a product pusher or a problem solver? Once you've established their why, you immediately pivot to their how. The next question is, walk me through your exact process step by step, from this initial conversation to a policy being approved and in my hands. This is where the mask really comes off. A salesperson, the one focused on a quick commission, will immediately start talking about products and quotes. They'll say something like, "Great question. Well, based on what you've told me, I can run some quotes for you right now with a few top carriers and we can see what the numbers look like." They're rushing to the finish line. They're trying to sell you a hammer before they even know if you're building a doghouse or a skyscraper. A trusted advisor will describe a process that is all about you. Their answer will sound more like this. Absolutely. Our process is designed to be thorough. First, we're going to have what we call a discovery meeting. This is where I shut up and listen. I need to understand your complete financial picture, your short-term and long-term goals, your family's needs, your concerns, your health history, everything. I'm not even thinking about products at this stage. After that, my team and I will go back and analyze everything. We'll build a custom strategy, essentially a blueprint, that shows you exactly how much coverage you need, what type of coverage makes the most sense, and why. Then, in our next meeting, we'll present that strategy to you. We'll educate you on the pros and cons of each approach. Only after you feel 100% clear and confident in the strategy, do we even begin to look at specific insurance carriers and products to implement that strategy in the most cost-effective way. That is the night and day difference. One is a sales pitch. The other is a professional consultation. One is about making a sale today. The other is about building a plan for the next 30 years. The broker who can't clearly articulate a client-first, education-based process is telling you, without saying a word, that they don't have one. Now, for the question everyone is afraid to ask but is the most critical of all. The money question. But you can't just ask, how do you get paid? They'll just say commission, and the conversation dies. You have to be more strategic. The question is, can you please explain to me in detail how your compensation structure works and how it might create a bias, even an unconscious one, toward recommending certain carriers or certain types of products over others? This is a professional level question. It shows you've done your homework. A bad agent will get defensive. They'll squirm. They'll say, oh, the commission is built in, you don't pay for it directly. Or, I'm always going to do what's best for you regardless of commission. They will deflect, dismiss, and deny the existence of any potential conflict of interest. A true professional, a trusted advisor, will welcome this question. They'll lean in. They might even smile because they respect the diligence. Their answer will be transparent and direct. It will sound something like this. That's an excellent and important question. Yes, I am compensated through commissions paid by the insurance company. It's crucial for you to know that different products do pay different commission rates. For example, a permanent life insurance policy typically pays a higher commission than a term policy. Also, some carriers offer marketing bonuses or trips if we place a certain amount of business with them. Now, here's how I neutralize that bias. My entire process, as we just discussed, is built on creating the strategy first before we ever look at products. The math in your goals dictate the recommendation, not the commission. I will always show you multiple options, including term insurance, and I will put my recommendation in writing, explaining precisely why I believe it's the best fit for your specific plan. My reputation is built on long-term trust, and I would never sacrifice that for a short-term commission difference. I'm happy to show you the illustration and commission structure for any product we consider. That is the sound of transparency. That is the sound of a professional who has wrestled with the inherent conflicts of their industry and has built a system of integrity to protect their clients. They don't pretend the conflict doesn't exist. They acknowledge it and explain how they manage it. With the philosophy, process, and payment structure uncovered, you move to the final two questions that test their expertise and their character. First, expertise. Are there any well-known insurance companies you choose not to work with and why? This is a subtle but powerful test of true independence. An agent who is just a captive in disguise or who hasn't done their homework will say, nope, I work with all the top-rated carriers. It's a lazy generic answer. A genuine independent broker has opinions. They are in the trenches every single day dealing with these companies. They know which ones have terrible customer service, which ones are notoriously difficult during the claims process, and which ones have underwriting departments that are impossible to work with for clients with certain health conditions. A great broker will give you a specific, well-reasoned answer. You know, that's a great point. I tend to avoid Company X, even though their rates look good on paper. In my experience, their underwriting process is incredibly slow, and they are very tough on clients with even minor cholesterol issues. I prefer to work with carriers like Company Y and Company Z for those cases, because they have a proven track record of getting my clients better offers, faster. This answer demonstrates deep industry knowledge and proves they are advocating for you, the client, not just grabbing the first quote they can find. Finally, you ask the question that reveals their character under pressure, the question that separates a salesperson from a lifelong advocate. You ask, tell me about a time a client situation got complicated. Maybe a claim was difficult, or a policy wasn't performing as expected. How did you handle it? What you're looking for is a story of advocacy. The weak agent will have no answer. They'll say, "Thankfully, I've never had that happen," which is either a lie or a sign of inexperience. The true advisor has been through the fire. They will tell you a real story, one that probably caused them sleepless nights. They'll tell you about the time a death certificate had a clerical error and the insurance company was delaying the claim, and how they spent hours on the phone with the county clerk and the insurance company's legal department to get it fixed, so the grieving widow could get her check. They'll tell you about the client whose permanent policy was underperforming due to a market downturn, and how they proactively scheduled a meeting, explained the situation in plain English, and laid out 3 different options to get the policy back on track. They won't be telling you a story about selling a policy. They'll be telling you a story about servicing a promise. They're showing you that their job doesn't end when the commission check clears. Their job begins. They are proving that when your family is at its most vulnerable, they won't be a ghost. They will be a warrior on your behalf. By asking these 5 questions, you've moved beyond the surface level. You've conducted a master-level interview. You've tested their motive, their method, their money, their market knowledge, and their mettle. You've forced them to reveal whether they are a commodity salesperson or a committed advisor. But even after they've passed this verbal exam with flying colors, the investigation isn't over. Words are one thing, proof is another. Now it's time to go digital, to become a quiet detective and verify everything they've just told you. It's time to look at the evidence they can't control. The first place you start your investigation is the modern-day town square. Online reviews. But I'm not talking about a quick glance at their star rating. Anyone can get their friends and family to post a few 5-star reviews. You're smarter than that. You're looking for patterns. You're looking for the story between the lines. Pull up their Google business profile, their Yelp page, anywhere customers can speak freely. Now ignore the 5-star reviews for a moment. Scroll all the way down. Find the 1-star and 2-star reviews. These are your gold mine. Don't just read what the angry customer wrote. Read what the broker wrote back. Did they respond at all? Silence in the face of criticism is a massive red flag. If they did respond, what was the tone? Was it defensive? Did they blame the customer? Or was it professional, empathetic, and focused on a solution? A broker who publicly says, "I'm sorry you had this experience, let's connect offline to make this right," is showing you how they handle conflict. A broker who writes a 5-paragraph essay about how the customer was wrong is showing you an ego that will be impossible to deal with when there's a real problem with your policy. Now go back to the 5-star reviews. Are they all generic? Great service. Super helpful. These are easy to fake. Look for the detailed ones. The ones that tell a mini story. John walked my husband and I through the difference between term and whole life in a way we finally understood. He was patient with our questions, even when we had to reschedule twice because of the kids. That's a real experience. That has weight. Look at the dates. Are all the reviews clustered in the same 2-week period from a year ago? That suggests they ran a campaign begging for reviews. What you want to see is a steady stream of feedback over time. That shows consistent performance, not a one-time push. This isn't about finding someone who is perfect. It's about finding someone who is transparent, consistent, and professional even when things go wrong. But online reviews are just the court of public opinion. It's time to check the official record. It's time to visit the one place a broker cannot hide, manipulate, or control: your state's Department of Insurance website. Every single person who sells you an insurance policy must be licensed by the state you live in. No exceptions. This isn't a suggestion. It's the law. And their license, along with any complaints or disciplinary actions, is a matter of public record. Most people have no idea this resource even exists, and it is without a doubt the most powerful tool at your disposal. Go to your search engine of choice and type in the name of your state followed by Department of Insurance Agent Lookup. You'll find a search portal. Type in the broker's full name or their license number if they gave it to you. The first thing you're checking is simple. Does a license exist? Is it active? If their name doesn't show up, or the license is expired or suspended, the conversation is over. Full stop. You have just dodged a massive bullet. But we're just getting started. Assuming the license is active, you're now looking for the dirt. You're looking for the section labeled disciplinary actions, enforcement actions, or complaints. This is the broker's permanent record. This is where you find out if they've ever been fined for misleading a client. if they've ever had their license suspended for unethical practices, if they've been formally investigated for misrepresenting the terms of a policy. Imagine this. You meet a broker who is charismatic, knowledgeable, and says all the right things. Your gut tells you they're the one, but you do your 5-minute digital due diligence. You run their name through the state's database, and you find a public censure from 3 years ago for selling an elderly client an unsuitable and expensive annuity. That 5-minute search just saved you and your family from potential financial ruin. This step is non-negotiable. It is the single most important background check you will conduct. Once you've confirmed they have a clean and active license, your next layer of investigation is to look for professional designations. This is the alphabet soup you sometimes see after a broker's name, like CLU, CHFC, or CFP. Most people's eyes glaze over when they see these, but to a trained detective like you, these are crucial clues about their commitment and expertise. Getting a state insurance license is frankly not that hard. It's the minimum requirement to be in the game. It's like having a driver's license. It means you passed a basic test, but it doesn't mean you're a professional race car driver. Professional designations, on the other hand, are the equivalent of advanced degrees. They require hundreds of hours of study, a series of rigorous exams, and a commitment to ongoing education and a strict code of ethics. Let's decode a few of the most important ones. If you see CLU after their name, that stands for Chartered Life Underwriter. This is one of the most respected designations in the industry. It means they have deep, specialized knowledge in life insurance planning for individuals, families, and businesses. It's a sign that they are a true specialist, not a generalist. If you see CHFC, or Chartered Financial Consultant, that's another powerful signal. It means they have a broad education in all aspects of financial planning, from insurance to investments to retirement and estate planning. This indicates they can see how your life insurance fits into your entire financial picture, not just as a standalone product. And then there's the CFP, or Certified Financial Planner. This is a very comprehensive designation that also requires them to act as a fiduciary in certain situations, meaning they must legally act in your best interest. Now, is a broker without these designations automatically bad? No. But a broker who has invested the time, money, and effort to earn them is sending a clear signal. They are telling you they are serious about their craft. They are committed to being more than just a salesperson. They are dedicated to being a true professional advisor. It's another piece of evidence that helps you build your case. Finally, your last stop on this digital investigation is their professional social media presence, specifically LinkedIn. This isn't about checking their personal vacation photos. This is about understanding their professional philosophy. Scroll through their profile and their posts. What kind of content are they sharing? Is it just a constant barrage of sales pitches? Rates are at an all-time low, call me for a quote. Or are they sharing educational articles, explaining complex financial concepts, and offering value with no strings attached? A true advisor educates. A salesperson pushes a product. Their LinkedIn feed is a window into their mindset. Are they trying to empower you with knowledge or pressure you with urgency? Look at their experience. How long have they been in the business? Do they have recommendations from clients or colleagues on their profile? This completes the picture. You started with their words in an interview. Then you moved to the words of their clients in online reviews. You verified their legal standing with the state, vetted their professional credentials, and assessed their public philosophy. You have built a complete file. You have gathered the evidence you can't get from a simple conversation. You've separated the pretenders from the professionals. You've narrowed the field to only those brokers who have a clean record, a commitment to their craft, and a philosophy of education. You've confirmed the character of the guide. Now, and only now, are you ready to look at the maps they want to sell you. Because even the most trustworthy guide can get you lost if the policy they recommend is a flawed and dangerous path. This is the moment of truth. Because the policy itself, the contract, the paper, the promise, is the map that will guide your family's financial security if you're not there. And there are 3 main types of maps a broker can show you. Think of them as 3 different ways to get through the wilderness. The first and most common is the direct route. This is term life insurance. Imagine you need to get from point A to point B. Point A is today with a mortgage and young kids. Point B is 20 or 30 years from now, when the house is paid off and the kids are independent adults. Term insurance is like a clearly marked, well-trodden trail that connects those 2 points. It is the simplest, most direct, and most affordable map you can buy. For the duration of your term, 10, 20, 30 years, if you pass away, your family gets the full payout. It's clean. It's powerful. Its only job is to provide the largest possible death benefit for the lowest possible cost for a specific period of time. It's a map for a specific journey. Once you reach your destination, financial independence, the map has served its purpose and you can let it expire. A great broker understands the raw power of this simplicity. They won't try to complicate it. They'll say, "You have a 30-year mortgage and 2 toddlers. Let's get a 30-year map that ensures, no matter what, your family makes it to the other side of that financial mountain." They're not trying to sell you a map that includes a detour to build a log cabin and a fishing pond along the way. They're focused on the mission. A red flag is a broker who dismisses term insurance out of hand, calling it temporary or renting your insurance. Sometimes renting is the smartest possible move. You rent a car on vacation, you don't buy one. Term insurance is for a temporary but massive financial need. Now, the second type of map is different. This is whole life insurance. This isn't a map from point A to point B. This is a map for your entire life's journey. It's designed to last forever, never expiring as long as you pay the premiums. This map is far more complex and far more expensive. Why? Because it's not just a path, it's a tool. Woven into the fabric of this map is a component called cash value. Think of it like this. As you walk the path of your life and pay your premiums, you're not just paying for the path itself. You're also slowly building a small guaranteed shelter along the way. This shelter, the cash value, grows at a slow, steady, guaranteed rate. You can borrow from it, use it to pay premiums, or even surrender the policy to take it with you. Whole life is the old school, tried and true, slow and steady map. It's predictable. It's guaranteed. It's for people who want a permanent death benefit and are willing to pay a significantly higher premium for that permanence and the slow, conservative growth of that shelter. A trustworthy broker will position this correctly. They'll explain that it's a financial tool for specific goals, like estate planning, funding a special needs trust, or for high-income earners who have already maxed out every other tax-advantaged retirement account. They will be brutally honest about the cost and the slow initial growth. They'll say, "This is the tortoise, not the hare. It's expensive, but it's guaranteed to finish the race." The danger is a broker who presents whole life as a magical investment, a replacement for your 401k. It's not. It's an insurance policy first, with a savings component second. Confusing the two is a classic sign of a guide who's more interested in their commission than your destination. And that brings us to the third and most treacherous map. This is where most people get lost. This is the world of universal life, specifically indexed universal life, or IUL. This is the choose your own adventure map. On paper, it looks incredible. It's a map that promises the safety of whole life with the potential growth of the stock market. It tells you that your cash value shelter can grow not at a slow, fixed rate, but linked to an index like the S&P 500. It even promises you won't lose money if the market crashes. You get the upside with none of the downside. Sounds perfect, right? This is where you need more than a guide. You need a master navigator who is also a skeptic. Because this map is filled with hidden paths, confusing symbols, and shifting terrain. The growth is often capped, meaning you don't get all the market gains. The policy comes with a dizzying array of internal costs and fees that can change over time. And the beautiful illustrations your broker shows you, the projections of how your cash value will explode into millions of dollars, are based on a perfect world scenario. They're not guarantees. They are marketing. It's like a map to a treasure chest that shows a sunny, clear path, but fails to mention the seasonal monsoons, the rock slides, and the band of pirates that control the territory. A truly elite broker will approach an IUL with extreme caution. They will spend more time explaining the risks than the rewards. They will show you illustrations based on conservative, even pessimistic assumptions, not just the rosy ones. They'll ask, what happens if the costs inside this policy increase? What happens if the market is flat for a decade? What happens if the insurance company changes the cap rates? They are stress testing the map. A salesperson, on the other hand, will only show you the treasure. They'll gloss over the fees, they'll point to the biggest, most attractive numbers, and they'll use phrases like "be your own bank" or "get stock market returns with no risk." That is a guide leading you straight into a trap. So, how do you know which map is right? You don't. Your broker does. But they only know after they've done a deep, thorough, and borderline invasive financial needs analysis. A great broker will act like a doctor before prescribing medicine. They'll ask about your income, your debts, your assets, your goals for your kids, your retirement plans, your health, your family history. They need to see the entire topography of your financial life before they can even begin to suggest a route. If a broker pulls out a policy recommendation in the first 15 minutes of meeting you, run. They haven't diagnosed the problem. They're just selling their favorite pill. A true professional will spend 80% of their time listening and 20% of their time recommending. They will likely come back to you and say something like, "Okay, based on everything you've told me, here are 2 or 3 potential paths. Path 1 is a simple 20-year term policy. It's the most cost-effective way to get your family to the point where your house is paid off. Path 2 is a smaller term policy combined with a small whole life policy. This gives you the bulk protection you need now, plus a permanent piece of coverage for final expenses later in life." Let's walk through the pros and cons of each for your specific situation. Notice the difference. They aren't selling a product. They are presenting strategies. They are comparing different maps. The broker who pushes one solution for every problem is not a guide. They're a hammer, and to them, every client looks like a nail. Your life, your family, your future. You are not a nail. You are a unique journey. Finding a broker who respects that journey enough to find the right map, not just the one that pays them the most, is the entire point of this process. Because a bad map, no matter how beautiful it looks on paper, will get you hopelessly lost. But the right map, in the hands of a trusted guide, doesn't just give you a path, gives you peace of mind. And that peace of mind is the real treasure you're searching for. Now, once you and your guide have settled on the right type of map, you have to ask a final critical question. Who made this map? Is the company behind the policy a rock-solid institution, or is it a fly-by-night cartographer whose ink might run in the first rainstorm? Because the strength of the promise is only as good as the strength of the company that makes it. So, how do you measure the strength of that company? How do you tell the financial bedrock from the shifting sands? You don't have to be a geologist or a Wall Street analyst. You just need to know where to look for the report from the people who are. In the world of insurance, these geologists are independent rating agencies. Think of them as the ultimate unbiased referees, sitting in the stands, watching every financial move an insurance company makes. They have no dog in the fight. Their only job, their entire business model, is to analyze these financial giants and assign them a grade, a score that tells you, the consumer, exactly how likely they are to be standing strong decades from now to pay that claim. There are 4 main players in this space. The 4 names you absolutely need to know AM. Best, Standard & Poor's, often called S&P, Moody's, and Fitch Ratings. Now S&P, Moody's, and Fitch rate all sorts of companies and government debt, from Apple to the US Treasury. They are titans of the financial world. But AM, Best, Best is special. They are the specialists. Their entire world since 1899 has been the insurance industry. They live, eat, and breathe insurance company financials. For this reason, many professionals in the industry consider the AM Best rating to be the gold standard, the first and most important one to look at. So what do these ratings look like? They look a lot like your old report card from school. They use a system of letter grades, and just like in school, you want to stick with the A students. For AM Best, the highest possible rating is A++. That's the valedictorian. Right below that, you have A+, which is still superior. Then you have A and A-, which are categorized as excellent. And frankly, this is the neighborhood you want to live in. A trusted professional broker will almost exclusively recommend companies that fall into this superior or excellent category. Why? Because when your family's future is on the line, you don't want the B student who's just good. You don't want the C student who is adequate. You want the absolute best. You want the company that has proven year after year, under the intense scrutiny of these independent agencies, that their financial house is in perfect order. Think about it this way. If you were hiring a bodyguard to protect your family, would you hire the one who's pretty good at their job? Or would you hire the elite, top-of-their-class professional with a flawless record? The financial rating of an insurance company is their record. It's a direct reflection of their ability to handle their obligations, to weather economic storms, to manage their investments wisely, and to be there when that ultimate call is made. A lower-rated company might offer you a slightly cheaper premium, a tempting discount. But that discount comes with a question mark. It's a bet, a gamble that they'll still be around and financially sound when you need them most. A great broker knows that this is a bet you should never ever have to make. Now, looking at 4 different letter grades from 4 different agencies can get a little confusing. S&P uses a slightly different scale than Moody's, which is different from AM Best. So, how do you make a simple apples-to-apples comparison? This is where a powerful tool comes in. A secret weapon that every top broker uses. It's called the Comdex score. If the individual ratings are grades in different subjects, the Comdex score is the insurance company's overall GPA. It's a single number on a scale of 1 to 100 that compiles and averages the ratings from all the major agencies into one composite score. The higher the number, the better. A company with a Comdex of 98 is, on average, ranked higher by the agencies than a company with a Comdex of 91. Simplifies everything. It cuts through the noise and gives you a single, powerful metric to judge a company's financial strength. When you're talking to a potential broker, ask them about the Comdex score of the companies they're recommending. If they immediately know what you're talking about, can pull up the scores, and can explain why they're recommending companies with scores of 90 or higher, that is a fantastic sign. It shows they are doing their homework. It shows they prioritize financial stability. If, on the other hand, they stare at you with a blank look or try to dismiss it as unimportant, that's a red flag. A big one. It might mean they don't have access to this kind of professional grade data, or worse, they don't think it's important. And if they don't think the fundamental financial security of the company backing your policy is important, what else are they overlooking? A trusted broker doesn't just show you the ratings, they welcome the conversation. They will proudly show you that they are placing you with an A+ rated carrier with a Comdex of 95. It's a point of pride for them. It's proof that they are acting in your best interest. They use these ratings not to sell you, but to educate you, to give you the confidence that the decision you're making is built on a foundation of solid rock. But the analysis doesn't even stop there. The truly world-class broker goes one level deeper. They understand that a rating is a snapshot in time. It's a picture of the company's health today. But what about yesterday? What about the trend? A great advisor will look at the company's history. Has its rating been stable for the last 20 years? Has it recently been upgraded, showing positive momentum? Or, and this is critical, has it recently been downgraded? A downgrade, even if the company still has an A rating, is a warning sign. It's a signal that the independent referees at the rating agencies have seen something that gives them pause. Maybe the company made some risky investments, or its cash reserves have dwindled. A proactive broker stays on top of these trends. They are subscribed to the industry alerts. They know not just what the rating is, but where it's heading. They also look at the company's story, its legacy. How did this company perform during the 2008 financial crisis? What about the dot-com bust in 2000? Did they need a government bailout? Or did they sail through the storm on the strength of their own conservative, prudent management? The oldest life insurance companies in the United States have survived the Civil War, 2 World Wars, the Great Depression, and dozens of recessions. They have paid out claims without fail through the best and worst of times. That history, that resilience matters. It's not just a number on a page. It's a track record of promises kept. This is the real work of a trusted broker. It's not just finding the cheapest price. It's performing this deep, multi-layered due diligence on your behalf. They act as your personal financial investigator, vetting the companies so you don't have to. Their choice of which insurance carriers to represent is one of the most important decisions they make in their business. Their short list of companies, the ones they present to you, is a direct reflection of their own professional standards. A broker who represents shaky, B-rated companies is telling you everything you need to know about their own judgment. But a broker who insists on only working with the A-rated, high Comdex, historically stable titans of the industry is making a powerful statement. They are telling you that your security is their #1 priority. So you've found a broker. You've confirmed they're independent. You've verified their credentials and their focus on education. And now, you've used their guidance to select a carrier that is a fortress of financial strength. The foundation is set. The promise is backed by a company you can trust. But what about the promise itself? What about the actual policy document? That dense, complicated contract filled with legal jargon and fine print. What lurks inside those pages? Because a rock-solid company can still sell a policy filled with trapdoors and loopholes. The next step is to understand the architecture of the policy itself, to shine a light into every corner, and make sure the design of your coverage is as strong as the company that built it. So let's talk about that architecture. Because a life insurance policy isn't just a piece of paper. It's a financial contract, a blueprint for your family's security. And just like building a house, if the blueprint is flawed, the strongest materials in the world won't save it from collapsing when the storm hits. A great broker isn't a salesperson. They are an architect. They don't just sell you a prefabricated plan. They sit down with you, understand your life, your goals, your fears, and then they design a custom blueprint just for you. The first, most fundamental design choice is the foundation. Are you building with term insurance or permanent insurance? Now, you've probably heard the endless debate. Financial gurus scream from the rooftops, buy term and invest the difference. They make it sound so simple, so black and white. But the truth, the reality that actual families live in, is far more nuanced. It's not about which one is better. That's like asking if a hammer is better than a screwdriver. They're different tools for different jobs. Term insurance is like renting a house. It's affordable, it's straightforward, and it covers a specific need for a specific period. You need to protect your family while the kids are young and the mortgage is high? You rent protection for 20 or 30 years. It's brilliant for that job. A trusted broker will identify that massive, temporary need and cover it efficiently with term insurance. But what happens when the lease is up? At the end of 30 years, you're 65 years old, the policy expires, and you've got nothing to show for it but the receipts. Which is fine. That was the deal. You paid for protection and you got it. Permanent insurance, on the other hand, is like owning your home. It's more expensive up front, absolutely. But you're not just paying for shelter. You're building equity. It's designed to last your entire life. It doesn't expire. This is the tool for permanent problems. Do you want to leave a legacy for your children or a charity? No matter when you die. Do you need to cover estate taxes? Do you want to ensure your spouse can live comfortably for the rest of their life, even if you live to be 100? These are permanent needs that require a permanent solution. The buy term and invest the difference crowd fails to mention the human element. They assume you will diligently, without fail, invest that difference every single month for 30 years. They assume you won't panic sell during a market crash. They assume you won't raid that account for a kitchen remodel or a new car. And they assume that when your term policy expires in your 60s or 70s, you won't need insurance anymore. For many, that's a dangerous gamble. A good broker understands this. They don't have a dog in the fight. They'll often design a plan that uses both. A big layer of term for the temporary what-ifs, and a smaller, foundational layer of permanent for the no-matter-whats. Anyone who tells you one is always better than the other isn't an architect. They're a salesman with a hammer who thinks every problem is a nail. But the blueprint goes deeper than just the foundation. The next layer of design is the features, the options, the little things that turn a standard policy into a custom-built fortress. These are called riders. Think of them as the secret menu at a restaurant. Most people don't even know they exist, but a seasoned pro knows exactly what to ask for. A lazy agent will give you the standard package. A trusted broker will walk you through the secret menu. The single most important rider today, without question, is the accelerated death benefit rider, often called living benefits. This is a revolution in life insurance. It says that if you get diagnosed with a terminal, chronic, or critical illness, think heart attack, stroke, cancer, the insurance company will advance you a significant portion of your own death benefit while you are still alive. Let that sink in. This transforms life insurance from a die too soon product into a get too sick product. Imagine getting a devastating diagnosis. On top of the emotional turmoil, you're now facing massive medical bills, you can't work, and your spouse has to take time off to care for you. The financial pressure is suffocating. But because your broker insisted on a policy with strong living benefits, you can access, say, $300,000 of your $500,000 policy tax-free right now. That money can pay for experimental treatments, hire a home health aide, eliminate your mortgage, or just give you the freedom to spend your last years with your family without worrying about money. A broker who doesn't passionately explain this to you is committing malpractice in my book. They are selling you a flip phone in the age of the smartphone. Another critical design feature, especially for term insurance, is the conversion privilege. This is your escape hatch. This rider gives you the contractual right to convert your temporary term policy into a permanent policy later on, without having to prove you're still healthy. This is huge. Let's say you buy a 20-year term policy at age 35. At age 50, you have a heart attack. You survive, but you are now uninsurable. No company will sell you a new policy, but your original term policy is about to expire in 5 years. What do? Well, because your broker made sure you had a strong conversion privilege, you can simply exercise your right. You convert that term policy into a permanent one, and you are covered for the rest of your life, regardless of your new health condition. A broker who sells you a term policy without this feature is selling you a car with no seatbelts. Now let's address the most misunderstood, and often maligned, feature in the entire financial world: cash value. This is the equity component of permanent life insurance. The critics will tell you it's a terrible investment with high fees. And you know what? If it's designed poorly by a greedy agent, they are absolutely right. A poorly structured cash value policy is a financial anchor that will drag you down. But when it's designed correctly by a specialist broker, it becomes one of the most powerful financial tools you can own. A properly structured policy is designed to minimize fees and maximize the growth of your cash value. This cash value then grows tax-deferred. You can access it through policy loans tax-free. And unlike your 401k or brokerage account, it has a contractual floor of 0%, meaning it doesn't plummet when the stock market crashes. Think of it less as an investment and more as your own personal bank or a financial multi-tool. It's a stable, secure place to warehouse capital that's protected from creditors in most states, that you can access for any reason: a business opportunity, a down payment on a rental property, a college tuition bill, an emergency, without penalties, without credit checks, and without begging a banker. The money you take out via a loan is still technically in your policy, earning interest and dividends, creating a positive arbitrage. It's a sophisticated strategy, and it's not for everyone. But here's the key takeaway. The difference between a powerful cash value asset and a fee-ridden nightmare is all in the design. It's about how the broker structures the premium payments, the death benefit, and the riders. A broker focused on their commission will design it to maximize their upfront pay. A trusted advisor will design it to maximize your early cash value and long-term growth. You need to ask them directly. Is this policy designed for minimum cost and maximum cash value accumulation? Can you show me the internal rate of return on the cash value and compare it to other conservative assets? Their ability to answer that question transparently will tell you everything you need to know. Understanding this architecture, term versus perm, the essential riders like living benefits and conversion, and the true purpose and design of cash value, is what separates you from being a passive buyer to an empowered owner. It allows you to look at a proposal and see beyond the fancy illustrations. You can now analyze the blueprint itself. You can spot the weak points, identify the missing safety features, and question the fundamental design choices. You are now equipped to have an intelligent, in-depth conversation with a potential broker. But knowing what a good policy looks like is only half the equation. You still need to be sure the person designing it has your best interests at heart. Because even the best architect can be tempted to cut corners if their incentives are misaligned. The final step, then, is to interrogate the architect themselves, to look past the policy and into the process and philosophy of the broker you're about to trust with your family's entire future. This isn't an interrogation in the sense of a police procedural, with a single bare bulb hanging over a metal table. Think of it, instead, as the most important job interview you will ever conduct. You are the CEO of your family's financial future, and you're hiring for the role of Chief Protection Officer. The salary is your peace of mind. The benefits are your family's security. And the cost of hiring the wrong person is unthinkable. Every question you ask is designed to peel back a layer, to move beyond the polished sales pitch, and see the raw mechanics of their operation and the true character of their counsel. Your first line of questioning shouldn't be about products, prices, or carriers. It should be about purpose. The first question you ask after the initial pleasantries should be simple, direct, and incredibly revealing. Why did you get into this business? Listen carefully to the answer. Are you getting a canned response about helping people that sounds like it was lifted from a corporate brochure? Or do you hear a genuine story? Maybe they had a personal experience with life insurance, or a tragic lack of it, that ignited a passion in them. Maybe they were a financial planner who saw it as the missing, non-negotiable foundation for every client. A broker who is driven by a deep-seated mission is fundamentally different from one who is just chasing a commission. The mission-driven broker sees your family's names on the application. The commission-driven one just sees the policy's face value. You want the one who feels the weight of what they're doing. Follow that up with, what is your core philosophy on life insurance? This question separates the technicians from the strategists. A weak answer sounds like this: my philosophy is to get you the most coverage for the lowest price. That's not a philosophy, that's a pricing strategy. It reduces this critical decision to a commodity, like shopping for car insurance on a comparison website. An even worse answer is one that pitches permanent life insurance as a magical investment vehicle. If they start talking about being your own bank or using it as a retirement plan before they've even diagnosed your core protection needs, you are talking to a salesperson, not an advisor. A strong answer sounds like this: my philosophy is that life insurance is, first and foremost, income replacement, and debt elimination. It's a defensive tool, not an offensive one. It's designed to make sure your family's life can continue with the least amount of financial disruption on their worst possible day. We build the foundation with term insurance to cover the years you're most vulnerable, and only then, if it aligns with your specific long-term financial goals, do we explore how permanent insurance might fit into a larger estate or business succession plan. See the difference? One is trying to sell you a product, the other is trying to solve your problem. Once you understand their why, you need to dig into their how. The single most important process question is, walk me through your entire process, from this first conversation to a policy being in force. Then be quiet and let them talk. You are listening for a roadmap. Does it sound organized, methodical, and client-centric? A great broker will describe a multi-step journey. It starts with a deep discovery call, where they ask about your income, your debts, your kids' ages, your future goals, your health history, and your biggest financial fears. They should be asking you more questions than you are asking them. If their first step is, well, I just need your age and a few details to run some quotes, that is a massive red flag. They are putting the cart miles ahead of the horse. They haven't diagnosed the problem, but they're already prescribing the medicine. The right process involves discovery, education, strategy, and then, and only then, shopping the market. They should explain how they'll prepare you for the medical exam, how they'll advocate for you with underwriters, and how they'll communicate with you every step of the way. You're looking for a structured professional process, not a let's wing it and see what sticks approach. Within that process, you need to probe their toolkit. Ask, how many different insurance carriers do you work with? An independent broker's greatest strength is their access. A captive agent who works for a single company has only one tool in their toolbox, a hammer. And to them, every problem looks like a nail. An independent broker should have access to dozens of carriers, 20, 30, or more. This isn't just about finding the cheapest price. It's about finding the right home for your specific situation. One carrier might be the best in the country for a client with well-managed diabetes. Another might specialize in pilots or scuba divers. A third might be more lenient on family health history. A broker with limited options is forced to fit you into the box they have. A broker with vast options can find the box that was built specifically for you. They are your personal shopper in a massive, complex marketplace, and you need to ensure they have access to the whole store, not just one aisle. Now we get to the question that can make some people squirm, but a true professional will welcome. How do you get paid? There is nothing wrong with asking this. You have a right to know. A trusted broker will answer this question without hesitation. They'll say, that's a great question. I am paid a commission directly by the insurance company after your policy is approved, and you've paid your first premium. The commission is built into the price of the policy, so the premium you pay is the same whether you buy it through me, another broker, or directly from the company. My goal is to find the best policy for you, because my business is built on long-term relationships and referrals, not one-time sales. That is a confident, transparent answer. A red flag answer is one that is evasive, defensive, or makes you feel uncomfortable for asking. If they say, oh, you don't need to worry about that, or the company takes care of it, they are treating you like a mark, not a partner. Transparency here is a proxy for overall integrity. If they're not straight with you about their own compensation, how can you trust them to be straight with you about policy details and recommendations? Finally, you need to stress test the relationship with forward-looking, what-if scenarios. The first is, what happens if my application is rated up or even declined? This question tests their expertise beyond the sales process. A novice or a lazy broker might just deliver the bad news and move on. An expert will have a plan B, C, and D. They will have anticipated this possibility based on your initial discovery call. They'll say, if that happens first, I'll get on the phone with the underwriter to advocate on your behalf and make sure they haven't missed any details. If we can't get the decision overturned, I will then pivot to these 3 other carriers who I know view this particular health condition more favorably. We will find a solution. This shows they are a problem solver and an advocate, not just an order taker. The next what if is crucial for understanding the long-term value they provide. What does our relationship look like after this policy is in place? The transactional agent will disappear the moment their commission check clears. The true advisor sees the initial policy as the beginning of the relationship, not the end. The best answer you can hear is, we will conduct periodic policy reviews, maybe every 2 or 3 years, or whenever you have a major life event like a new child, a new home, or a significant salary increase. We need to make sure the protection we're putting in place today still fits your life tomorrow. This person is your partner for the long haul. And the final expert-level question that almost no one thinks to ask. What is your agency's succession plan? What happens to me and my family's policy if you retire, get sick, or leave the business? This might seem like a strange question, but you are buying a promise that may not be called upon for 30 years or more. You need to know that the advice and service will outlive the person giving it. A great broker, or one who is part of a great agency, will have a clear answer. They'll talk about their partners, their support staff, or the continuity plan their firm has in place to ensure clients are always taken care of. It shows they are a business owner who thinks about legacy and stability, the very same things they should be helping you think about. It proves they're not just building a job, they're building an institution you can rely on decade after decade. By asking these questions, you transform yourself from a passive consumer into an empowered executive. You're not just buying a policy, you're hiring a professional guardian for your family's future. And now the final interview begins. This is where you separate the slick salesperson from the steadfast advisor. Think of it like this. You're not just looking for someone with the right credentials. You're looking for someone with the right character. Because when the worst day of your family's life arrives, it won't be a certificate on the wall that matters. It will be the character of the person they call. So let's talk about the giant flashing neon red flags to watch for. The things that should make you stand up, thank them for their time, and walk out the door without looking back. The first and most dangerous red flag is high-pressure sales tactics. This is the oldest, dirtiest trick in the book. It sounds like, this illustration is only good for today. Or, the rates are about to go up next week, you have to lock this in now. Let me be crystal clear. This is a manipulation tactic, designed to create a false sense of urgency. It short-circuits the logical, decision-making part of your brain and activates the fearful, impulsive part. A true professional knows that buying life insurance is one of the most significant financial decisions you'll ever make. They want you to be comfortable. They want you to sleep on it. They want you to be 100% confident. Anyone who rushes you is not serving you. They are serving their own monthly sales quota. The second red flag is the one-size-fits-all pitch. This is the broker who has a favorite product, and miraculously, it's the perfect solution for every single person they meet. Often, this is a complex permanent policy like an indexed universal life or IUL. They'll show you dazzling charts with hockey stick-shaped growth projections, talking about how you can get stock market returns with no downside risk. It sounds incredible, almost too good to be true. And it often is. If a broker launches into a product pitch before they've done a deep, thorough, almost uncomfortably detailed analysis of your personal finances, your goals, your family structure, and your risk tolerance, they are not an advisor. They are a product pusher. They've already decided what they want to sell you before they even know who you are. Run. The third red flag is a lack of transparency, especially around compensation. You have an absolute right to know how and how much your broker is being paid. If you ask them, how do you make money on this policy? And they get defensive or they give you a vague, jargon-filled answer, that's a problem. A trustworthy advisor will be an open book. They'll say, the insurance company pays me a commission which is built into the premium. It doesn't cost you anything extra. On this term policy, it's X% of the first year's premium. On this permanent policy, it's Y%. They'll be upfront and comfortable with the conversation, because they know their value isn't just in the sale, but in the lifetime of service they provide. Secrecy is the enemy of trust. Imagine a young father named Mark. He meets with a broker who is charismatic and confident. The broker pulls out a beautiful glossy brochure for an IUL policy. He talks about funding college, tax-free retirement income, and leaving a massive legacy. He pressures Mark, saying the market window for this product is closing. Mark feels the pressure. He feels like if he doesn't do this, he's failing his family. He signs the papers for a policy with a premium that's a major stretch for his budget. Fast forward 5 years. The market has been flat. The policy's internal costs and fees have eaten away at his cash value, and the premium payments are now a crushing burden. He feels trapped. The broker who was so attentive is now nowhere to be found. Mark wasn't sold a solution. He was sold a commission. Now let's flip the script. Let's talk about the brilliant glowing green flags. The signs that you've found a true professional, a genuine guardian for your family. The first and most important green flag is an educational approach. A great broker's primary goal is not to sell you, but to teach you. They'll use analogies. They'll draw diagrams on a whiteboard. They'll simplify complex topics until you feel a sense of clarity and confidence. They'll say things like, think of term insurance like renting an apartment. It's pure protection for a specific period. Think of whole life like buying a house. It's more expensive, but you're building equity for the long term. They will not move on to the next point until they see in your eyes that you truly understand. They want you to be the smartest person in the room about your own financial plan. Their success is measured not by your signature, but by your understanding. The second green flag is a deep, comprehensive discovery process. The first meeting with a top-tier broker should feel less like a sales pitch and more like a doctor's checkup or a therapy session. They will ask questions you haven't even thought of. Not just how much do you make, but what does your ideal retirement look like? Not just do you have kids, but what are your specific dreams for their future? They'll ask about your business, your debts, your parents' health, your estate plan, your philanthropic goals. It might feel invasive, but it's not. They are gathering the raw materials needed to architect a plan that is custom-built for your life, not for someone else's. An advisor who spends 90% of the first meeting listening and 10% talking is an advisor you want to hire. The third green flag is the presentation of multiple, well-reasoned options. A broker who is truly independent and has your best interests at heart will never show up with just one quote. They will come back to you with a comparative analysis. They'll say, okay, based on everything we talked about, I've shopped your case with 15 different A-rated carriers. Here are the top 3 options. Company A is the cheapest, but they're very strict on underwriting for blood pressure. Company B is slightly more expensive, but they have a fantastic conversion option we should consider down the road. Company C is the premium choice, with a great rider that could pay out if you have a critical illness. Let's walk through the pros and cons of each one as it relates to your specific goals. This demonstrates that they've done the work, they respect your intelligence, and they are empowering you to make the final informed decision. Think of Sarah, a new entrepreneur. She meets an advisor who spends their entire first meeting just asking questions and mapping out her financial world on a legal pad. In the second meeting, the advisor presents a plan that starts with a very affordable 20-year term policy to cover her mortgage and protect her young family. But she doesn't stop there. She also shows Sarah a roadmap. Right now, the advisor says, cash flow is tight, so we start with this term. But in 5 years, when your business is thriving, we have a plan to convert a portion of this policy into a permanent one to start building cash value. In 10 years, as you hire key employees, we'll add a policy to fund a buy-sell agreement. This isn't a one-time purchase. It's a living plan that will evolve as your life and business grow. Sarah feels a profound sense of relief. She doesn't just feel insured. She feels seen. She feels understood. The ultimate litmus test, the one question you can ask that will reveal everything, is this. Can you please show me an in-force illustration? An in-force illustration is not the glossy sales projection. It's a projection of the policy's performance based on the current, guaranteed interest rates and maximum costs. It's the worst-case scenario. A salesperson will squirm. They'll make excuses. They'll say it's not necessary. But a true advisor will welcome the question. They'll say, absolutely. Let's stress test this. I want you to see how this policy performs not just in the best of times, but in the worst of times, so there are no surprises. That transparency, that willingness to show you the truth instead of just the fantasy, is the ultimate green flag. It's the sign that you've moved beyond the world of sales and into the realm of true professional advice. Finding this person isn't about just protecting a death benefit. It's about finding a partner who will help you build a legacy. It's about finding the person your spouse will call, shaking and in tears on the day you're gone, and that person will say with calm, confident compassion, I'm so sorry. Don't worry about the finances. I've got it from here. We planned for this. But even after you've found this perfect broker, there's one final critical stage. It's the part where the broker's true skill is revealed, a process that can save you tens of thousands of dollars over your lifetime and dramatically increase your chances of getting approved. It's the art and science of the application and underwriting process, and it's where a great broker earns their commission 10 times over. Let me show you exactly what that looks like in the real world. Imagine two people, both named David. Both are 45 in decent health, but both had a bout with depression 5 years ago and took medication for a year. They both need $1 million 20-year term policy. The first David goes to a call center or a less experienced agent. The agent asks the standard questions, checks the box for history of mental health treatment, and submits the application to the cheapest carrier on their screen. The application lands on an underwriter's desk. The underwriter sees a black and white fact: depression. They don't have context. They don't have a story. They see a risk factor. So they either decline the application outright or they come back with a rated policy, meaning the price is now 50 to 100% higher than quoted. David is frustrated, feels penalized for seeking help, and probably gives up on getting life insurance altogether. Now let's look at the second David. He finds a true broker. This broker spends an hour on the phone with him, not just asking about his health, but understanding the circumstances. The broker learns that the depression was situational, triggered by a job loss, that David sought therapy, took medication as prescribed, and has been thriving ever since with no recurrence. The broker doesn't just check a box. They act as David's advocate. Before submitting a single application, the broker writes a detailed, anonymous cover letter. It tells David's story. It highlights his proactivity in seeking treatment, the situational nature of the event, and his excellent health since. The broker sends this anonymous preliminary inquiry to 10 different insurance carriers. Why? Because the broker knows that Carrier A is notoriously strict about mental health history, but Carrier F and Carrier H are known to be far more understanding if the condition is well documented and resolved. The carriers respond. Most of them offer the higher rated price, but 2 of them, Carrier F and H, come back and say, based on this story, we're comfortable offering a standard rate, maybe even a preferred rate, pending the full medical records. Now, and only now, does the broker submit the formal application to the 1 or 2 carriers who have already given a favorable preliminary offer. The result? The second David gets approved for the exact same policy, but he pays the originally quoted standard price. The difference in his premium over the next 20 years isn't a few $100s. It's over $20,000. That is the art and science of the application. That's the difference between an application taker and a professional broker. One submits data. The other tells a story and fights for you. So as you embark on this journey, I want to arm you with a final critical tool: the major red flags to watch out for. If you see any of these, you run, you don't walk, you run in the other direction. First is the one-trick pony. This is the person who, within 10 minutes of talking to you, has already decided that you need one specific type of policy. It's almost always a complex, expensive permanent policy like a whole life or an indexed universal life plan. They'll use phrases like "be your own bank" or a tax-free retirement plan. Now, are those policies ever appropriate? Yes, for a very small percentage of the population in very specific financial situations. But for the vast majority of American families, they are massively overpriced and inefficient. A true professional starts with your needs, your budget, and your goals. They don't start with a product and try to jam you into it. If the solution comes before the diagnosis, you're not talking to a broker, you're talking to a product pusher. The second red flag is the pressure cooker. This is the oldest, sleaziest sales tactic in the book. They create a false sense of urgency. They'll say things like, "This quote is only good for today," or "The rates are about to go up next week, so you have to lock this in now." Let me be crystal clear. That is almost always a lie. Life insurance pricing is highly regulated. It doesn't change day to day. An insurance company might reprice its products, but that's a process that takes months, and your broker would have plenty of notice. This tactic is designed to stop you from thinking, to stop you from comparing, and to rush you into a decision you might regret. A professional advisor gives you space. They educate you, present options, and empower you to make a decision on your own timeline. They want you to be confident, not coerced. Red flag number 3 is the ghost. This is the broker who is incredibly responsive and charming when they're trying to earn your business. They answer your calls on the first ring, they reply to emails in minutes. But the second you sign the application, they vanish. Suddenly, emails go unanswered. Voicemails aren't returned. You have a question about the medical exam and you can't get a hold of them. This is a massive warning sign. Think about it. If this is the service you get when they're trying to make a commission, what kind of service do you think your family will get in 20 years when they need to file a death claim? The sales process is a direct preview of the service process. Test them. Ask questions. See how they respond. A great broker is your partner for the life of the policy, not just for the life of the sale. And the final, most subtle red flag is the jargon master. This is the person who tries to sound smart by making everything sound complicated. They'll drown you in acronyms, IUL, VUL, ROP, and complex illustrations with dozens of columns of non-guaranteed numbers. They do this for one of 2 reasons. Either they don't actually understand the products well enough to explain them simply, or worse, they're intentionally trying to confuse you. Confusion is a sales tactic. It makes you feel like you have to trust the expert because you can't possibly understand it yourself. Albert Einstein said, "If you can't explain it simply, you don't understand it well enough." A great broker takes the complex world of insurance and makes it simple. They use analogies. They draw pictures. They ensure you understand exactly what you are buying, why you are buying it, and how it works. Clarity is their goal, not confusion. So, after everything we've covered, the different types of agents, the questions to ask, the process itself, it all boils down to one simple golden rule for finding a trusted partner: find the educator, not the salesperson. The entire goal of a salesperson is to close a deal. The entire goal of an educator is to empower you with knowledge. A salesperson talks at you. An educator talks with you. A salesperson focuses on the product. An educator focuses on your problem. The commission a great educator earns is simply a byproduct of them doing their job exceptionally well, which is to guide you to the best possible solution for your family. When you find someone whose primary passion is teaching, you have found the right person. Let's quickly revisit the core mission. This isn't just about buying a policy. It's about a promise. It's about ensuring that if the unthinkable happens, the lives of the people you love don't have to be upended financially. It means the mortgage gets paid. It means your kids can still go to college. It means your partner has time to grieve without the immediate, crushing pressure of financial ruin. It is one of the most profound acts of love and responsibility you can undertake. Getting it right is not just important, it's everything. And now you are prepared to get it right. You know the difference between a captive agent and an independent broker. You know how to vet them, what questions to ask, and how to spot the red flags. You understand that the cheapest quote isn't always the best offer, and that the real value of a broker is in their ability to navigate the complexities of underwriting on your behalf. You are now more informed than 99% of the people who set out to buy life insurance. The path forward can feel overwhelming, so I want to make it as simple as possible. To help you put all of this into action, I've created a free one-page PDF called the Trusted Broker Scorecard. It distills this entire series down into a simple checklist. It has the key questions you need to ask any potential broker, the red flags to listen for, and a simple scoring system to help you compare candidates and make a confident choice. There's no fluff, just a practical tool you can print out and use on your very next phone call. The link to download it for free is right there in the description below this video. Your family's financial security is the bedrock upon which their future is built. It's too important to leave to an algorithm, a call center, or a slick salesperson. You have the knowledge. You have the tools. Your task now is to take that first simple step. Find a true partner, an educator who will put your family's needs first. Build a fortress of protection around the people who mean the most to you. It will be one of the best decisions you ever make.